Yo, what's going on, guys? This is your boy Mac the Trader back with another video. So in this video, as you guys can see, we're going to be breaking down a US500 day trade, right? I've been getting a lot of questions and a lot of DMs. Hey Mac, can you please continue to bring the index market to your YouTube channel? Now, my team and I take these trades on a daily basis, and if you guys want to continue to see these types of setups and these types of moves, then of course we are going to continue to bring them to you all. So this is the move that we took today. Today is Wednesday, May 24th within the market. We're still waiting on our take profit to be hit. As you guys can see, it came very, very close. Then we had this nice little breakdown here. Still held the position open. 1R was already closed, so therefore it was a risk-free trade. And we're waiting for price to possibly push to the upside, but depending on what happens within this area on the lower time frames, we may actually go ahead and close this trade pretty soon here. I'll keep you guys posted within the Telegram community. Now, those of you guys who aren't a part of the Telegram community, you may want to consider joining. Why do you want to join the Telegram community? Because if you cannot afford the mentorship, all right, by the way, the mentorship price has gone up to $99, right? We have so many students, and we have so many students that have been able to pass funded accounts, and the information a part of the mentorship program literally will take you to the next level, right? You guys see these breakdowns all the time. We actually posted this on our Instagram as well. If you don't follow me on Instagram, feel free to check that out. All right, go like the recent post as well. Much love, much appreciated. Right, so let's go ahead and get into this breakdown. And if you're not a part of the Telegram community, you may want to consider joining, because the Telegram community is going to assist you with understanding how we view the market through our daily analysis that are released. All right. Not only will you be able to understand how we view the market, but you will also be able to take advantage of our trade setups whenever we do have a trade setup. And also you gain access to my currency PDF guide. And also you gain access to my currency strategy guide free of charge, which is a $99 value that we don't sell anymore because it was for master class students, all right? But those of you guys who are part of the Telegram community, you guys gain access to that masterclass strategy guide and content as well for anyone who wants to be able to day trade currencies on a daily basis. With that being said, let's go ahead and get right into the intro, and then let's get right into the breakdown. I'll catch you guys. All right, so before we get into the breakdown, all right, we're going to start on the M15 first and then work our way down to the entry time frames. But before we get into it, you guys know I have to show you the before. So here's the before of the trade. We entered during the PM session, all right, and we simply just allowed the trade to run to our take profit. Now, sometimes we will close around 1600 hours, but as long as we are risk-free, all right, we are comfortable with allowing our trade to run even after 4 p.m. Eastern Standard Time. All right, as you guys know, 4 p.m. is around the time that we try to get out of the market, or at least try to mitigate our risk within the index market. All right, so let's go ahead and get into this breakdown that you guys have seen the actual trade being entered and things like that, and you guys can see where we're at. All right, so this morning, okay, we didn't have much take place within the AM session here, right? We don't have any type of sweep of liquidity here, all right? However, we did create buy-side liquidity during the AM session, all right, that could have been used as a possible target. However, I did not like the return by targeting this area here. First target was here for us, all right, where we went risk-free. Second target is here. As you guys can see, we barely tapped into it, haven't quite hit it just yet, and then price fell to the downside. Now, this wick here, okay, mitigating this imbalance here, is notifying us that price may actually want to continue to push to the upside, and this was simply just a rejection type of candle, right? We see that we tapped into this imbalance here. Let me break this down for you guys really quickly before we actually get into today's trade, because I really want you guys to get this. So we can see that we have imbalance here. Price tapped into that imbalance and then pushed to the upside, right? So we're looking for price to break this swing high here. All right, I would go ahead and mark it up on your charts if I were you, and I would pay attention to how price reacts now that we have mitigated this M15 imbalance here after sweeping sell side liquidity during the PM session as well. All right, now let's go ahead and get into the actual breakdown on why we took a buy position down here within this area. Now, those of you guys that have access to my index trading course, okay, if you're a mentorship student, you automatically gain access to it. It comes with your mentorship, as well as access to myself and my team, our weekly webinars, okay, and all of the recorded content of me breaking down trades, of me doing one-on-one sessions with students, group sessions. So you guys have a plethora of information. We literally have over 200 videos for you guys to actually watch and learn from, okay, outside of the courses. All right, so if you're not a mentorship student, what I want you to do is click Mac Trading Academy link in the description and become a mentorship student so we can take your trading to the next level. Give us 3 months. Let us take your trading to the next level, and by this fall, you're going to be funded and you're going to be producing results that the world is not familiar with. We've seen it happen time and time again, and I want you, the one listening to this video, to become our next success story, right? Let's get you funded. Let's get the ball rolling. Let's give you the strategy that we use every single day, that we've been using for over 2 years within the market. And as you guys can see from the YouTube content, results are being produced within the index market quite often. And if you guys want to continue seeing this, feel free to leave a like. It definitely notifies myself and my team that you guys are liking the index market, okay? I know we have a lot of traders that are more interested in the currency market, but the index market is going to be very, very consistent with the returns and with the setups that take place. Now let's get into the breakdown. So what we saw happen this morning, okay, we didn't really have much to do this morning, all right? There's really nothing for us to do based on our strategy. However, for the PM session, we had a beautiful opportunity to take a long position simply because during the overlap, we had a sweep of sell side liquidity here. All right, we can see this M15 swing low. Okay, what happened during the PM session? What happened during the overlap session? Price pushed to the downside and we swept this liquidity. Once 1 p.m. Eastern Standard Time came into play, okay, we simply just went down to our lower time frames to look for our entry. Now, there are multiple ways that we can actually take our entry, and there are multiple ways that we can set our take profit. What I want you guys to pay attention to is the manipulated ranges that take place within the market, okay? So here we can see we have a manipulated range. All right, we see that price creates a swing low, okay? We have a nice push to the upside, we create a swing high, and then we push back to the downside, sweeping this low right after breaking this high. So we swept this low here, then we pushed to the upside after sweeping this low, and we took out this high here. That tells us that this entire region here is manipulated, okay? And that gives us a reason to actually take a long position. Should we make it gray? Let's make it pink. Should we make it pink? There we go. So this entire push here is manipulated, okay? It was in order to stop out traders, in order to push the market in the opposite direction after sweeping liquidity that was in the market in the form of retail traders. All right, so after we had that nice push to the upside, okay, taking out this high here, we actually had an opportunity to go to the lower time frame and possibly look for an entry. Now let's take this off of the lower time frame because I don't want too much going on. There we go. Perfect. Now, our first entry time frame that we go to is, of course, the M5. You guys know this from previous videos and things like that, right? So the M5 time frame is one time frame that you can definitely use in order to take advantage of entries, all right? So once we swept this liquidity here, okay, we were watching price. However, we cannot take an entry between 12 p.m. Eastern Standard Time and 1 p.m. Eastern Standard Time, all right? No entry is ever taken. Now, if you want to know why, okay, the index course is going to break that down from A to Z, okay? Students who have access to the index course, finish the index course and are literally able to apply the strategy the next day. This is not a strategy where you're going to have to study it and trial and error and put your own spin on it. No, this is a strategy where you learn the information within the index course, and then the very next day you're able to apply this information and make money from the markets, right? So those of you all who have a 9-to-5, those of you all who work a part-time job or have a side gig, make sure you all are putting money to the side, whether it be 10% every month, 20% every month, and make sure you are investing into yourself and your future. How are you going to do this? You're going to do this by taking the money that you're saving and investing it into a vehicle or an asset in order to have a return. As you guys know, the US dollar is losing strength every single day because of inflation. If you are not investing the dollars that you have, then it will be difficult for you to stay on top after the recession and even moving towards the recession, all right, as inflation continues to rise. Now, Fed Walker, if you guys don't know, Fed Walker has already said that they are not interested in dropping inflation rates until inflation decreases, right? So right now inflation has not decreased just yet. So what does that mean? That means that they're going to continue to increase rates until they see a reason to stop, all right? Basically, that means that your US dollar is going to be losing value every single time they increase rates, which means $20 within your savings, which means $20 that you have within your savings account, which means the money that you have within your savings account, okay, is continuing to lose value because it is just sitting. You have to take that money, you have to invest it into a vehicle such as day trading, the Us500 market, in order to continue to grow it, all right? There are so many students that we have that use their trading account as a savings account, and I would recommend that only if you are disciplined with your risk management. If you're not disciplined with your risk management, then feel free to just become a funded trader and move forward in that direction. But as you continue to learn throughout the mentorship program, all right, you will become disciplined and you will start to produce results that the world is not familiar with. So as we can see here, okay, 1300 hours, 1 p.m. Eastern Standard Time is here, all right? Once 1 p.m. came, okay, we already had that sell side sweep of liquidity here during the PM overlap here, all right? Then we see that price move to the upside. All we're looking for in this case here, and we actually could have taken an entry here, all right, but I did not take this entry simply because I wanted to see a little bit more volume with breaking swing highs. So as you guys can see here, we did take out this swing high here, right? However, we had a rejection candle, right? Price still closed here, so we didn't want to take a risk on this inefficient pricing here that you guys are seeing, right? I definitely had students who took this as a trade. It is okay if you took this as a trade, right? You still were able to produce results, and your stop was very, very close, very, very minimal drawdown here as well before we had that push. However, the entry that my team and I took advantage of was this entry right here. Okay, let me break down the reasons why. So here we can see that we had a confirmation break and continuation. All right, what do I mean by that? Well, previously, all right, as we're seeing here, we have a break of this swing high, all right, telling us that price wants to continue to push to the upside. Right, so we broke this swing high, price pushed to the upside, and then we rejected. We traded back down into this imbalance, and then we saw a major volume spike within the market with this nice push to the upside, taking out this swing high as well. This swing high was taken out, imbalance, inefficient pricing was left behind, which is here, right? Once that inefficient pricing showed up on our charts, all right, that is where we actually set our order. All right, so the order was set here. Stop loss was set down here within this region, okay, because this is our invalid zone, okay, for this entire setup. And our target was simply based on swing highs. But I'm going to actually show you guys another way that you can set your target based on the manipulated range, all right? We entered the market around 2 p.m. Eastern Standard Time. Like I said, stop loss was set down here. So we risked about 10 points on the S&P 500, and we were looking for about 32.5 points, right? So we were looking for about a 3.25% return. Now you guys may be saying, oh, 3.25% doesn't seem like a lot if you're risking 1% of your account, but these setups form every single day within the market. And if you're a day trader, or if you're an aspiring day trader, you're going to want to trade a strategy that produces consistent setups and consistent results, right? As we continue to move into the summer, you guys are going to see a decrease in the currency market. It's natural, it's going to happen, right? But what you won't see a decrease in is going to be the index market, right? You're going to continue to see these setups form on a daily basis. Now, how do I and my team know this? Well, we know this because we've been trading the Us500 market for over 2 years. And last year, we took the entire year, or I took the entire year, and I simply just focused on the index market, which is why we released the index course, giving you guys the strategy to produce the same results that we do on a daily basis, right? So entry was here, stop loss was here. We were looking for this take profit based on this M15 swing high here, all right, that formed yesterday, all right? We see that we had a nice push to the upside. This was a very, very quick and easy trade. It did not take long at all to push to the upside. It took about 4 hours, which honestly is not that much time, considering that you were able to produce close to 3.25% on this trade here, right? The S&P 500, if you dollar cost average into the S&P 500 over a time period of about 12 months, you should see an average return of about 6%. We were able to produce half of that in 4 hours. This is the power of day trading, and all you need to do is join the mentorship program so I can give you this strategy and you can start to produce these results on your own within your own trading account, become funded and stay funded. All right. So this was a very, very straightforward trade this morning. Now let's get into how you all can set your take profits if you do not know how. All right. And it deals with the manipulated range. Now there are different ways that the manipulated range forms. All right. And in the index course, we break down the different ways that you may see a manipulated range form. I've already broken down the manipulated range from this morning during the overlap. All right, it's from this high here to this low. All right, and what you can simply do is you can set your targets based on the standard deviations. Now, this is the secret to using the standard deviations. Do not set your take profit at any standard deviation unless you see at least a 2% return, a 2R return. Right, so 1.5, if we would have set it here, right, based on the manipulated range, we see that's a 0.63%. Simply move it up to the next standard deviation. We see that this standard deviation here is about a 1.18%. All right, simply move your take profit to the next standard deviation. We see 2.5 standard deviations of this manipulated range is a 1.73, and then 3 standard deviations of the manipulated range is 2.28% return if you're risking 1% of your trading account per trade. That is what you want to target, okay? 3 standard deviations. Why? Because it at least produces you 2R. Now, I know a lot of traders out there that may get a little confused on which swing high they should target, which swing low they should target based on whether or not they're buying or selling. But using the standard deviations of the manipulated range is going to make it really easy for you to just set a target and watch that target get hit consistently. Now, I can't really give you guys the rules, all right? If I give you guys the rules, my team is going to be very, very upset. We've spent so many hours backtesting this type of information and actually trading this information, taking losses, and then eventually taking a lot of wins in order to know what to use specifically. So I can't give you guys the specific rules, but if you are able to catch what I just said, okay, I want you to go back test it and you will start to see consistent returns using the rules that I just gave you based on the manipulated range. All right, and using the 2, right, and looking for at least a 2R return. All right, very, very straightforward. So Once again, this is the trade that I'm currently in. I'm gonna pull it back up on screen for you guys. If you guys do have any questions about this setup or about this trade, feel free to drop it in the comments below. All right, subscribe to the YouTube channel if you haven't already. I would love to have you a part of the family, and feel free to leave a like on this video if you want. And feel free to leave a like on the video if you want to continue to see index. And feel free to hit that bell notification icon to be updated whenever we upload a video if you want to continue to see trading content. All right, so this is the day trade that we took today. Very, very straightforward. I mean, based on the movement of the currency markets, right, we've actually been trading the index market a lot more than we have been trading the currency market lately as we continue to move into summer. It's to be expected, right? So make sure you guys are able to pivot from currency to the index market, from the index market to the currency market. All right, we use different strategies for both, but they still produce amazing results when used with proper risk management and discipline. With that being said, if you're not following me on Instagram, go ahead and follow me at TrillionaireMac. Go like my most recent post. I will catch you guys in the next video. Much love and peace out.